Me's a lot lizard. He's an effing sucking wizard. The foo-foo's a lot lizard. Woo! Can't be too loud, baby sleeping. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we're going to look at Honest My Bonest, who just released their first quarter 2022 earnings. And oh my God, what a total freaking disaster. Connection. I think I just lost my internet for a second. Swimsuit, Jessica Alba's hot. Oh my God. And there's a couple of YouTubers that love the stock. Well, there's one in particular. His name is Jeremy Financial Education. So we're going to look at the financials of this company and see if I think this company can survive and thrive. Because right now, I'm really not convinced this company is going to do that well. So let's go ahead and check out the earnings. Honest my bonest. So here it is. The Honest Company reports first quarter 2022 results in line with outlook. And remember, their outlook was freaking trash. So we see the first thing that we see. If you consider buying a growth company, you obviously want growing revenues, right? I mean, that's the one thing that at least some growth companies have for them. Look at the freaking revenue growth. Well, it wasn't growth, it was decline. Diapers and wipes down 13% since last year. Skin and personal care, and think about how much of a moat this company has. Skin and personal care, I've never seen that before. Down 19%. Core categories. These are the core categories that they're always freaking bragging about. A total of 15% down. Household and wellness down 20% for a total revenue decline year over year of 15%. Holy crap. Where's the growth? And at least they're not diluting you. So the revenue per share probably isn't. Well, they're diluting a little bit. Revenue per share probably isn't as bad as some of these other companies these clowns are pumping. But this is not encouraging, okay? No moat whatsoever. Zero moat. There is no distinguishing characteristics about Honest that any other company has. Walmart brand, Procter & Gamble, Johnson & Johnson, this and that. All these freaking companies give the same, they provide the same crap. It's ridiculous. And every single store has their own brand to compete with stuff like Honest. When I go to Walmart, I get the Walmart brand, and it's perfectly fine. Okay, some of you health nuts, oh my God, it's the Walmart diapers are going to kill your kid. He's fine, okay? He's healthy. He's happy. Oh, you need Honest. So, obviously, revenue's going down. That's total freaking trash. Let's go look at the financials. Because, like, here, when you read this crap, they're going to give you a bunch of, hocus pocus BS to try to make their company look good. But at the end of the day, you got to look at the financials. It's all that matters. So we go all the way down. It's buried down here. So we have the condensed consolidated statement of comprehensive loss. Statement of loss. That's very encouraging. So we go down, and they have a net loss of $14.6 million on $68 million of revenue. So their loss margin was 68719, negative 21% loss. Wow. Gross profit. Let's see what the gross profit is. 20 million, 627 divided by 68,719, 30%. Okay. Let's see how their gross profit changed over the last year. So their gross profit a year ago for the quarter ended 2021, March 31st, 2021, was 35%. Now it's 30%. Yes, we have inflation, supply chain stuff, but that's still not encouraging. Their revenue's declining. Their gross margin's declining. They have a much larger loss than last year. Holy freaking crap. And you can look at the shares outstanding. Now, it's been really screwy. I don't know if the data is just inaccurate, but they were not public, at least from what I remember, on March 31st, 2021. But now you can see shares have tripled because they issued shares when they went public. So, I mean, oh, God. Okay, let's look at the balance sheet. So I want to check something because I want to see roughly when I think they may have to issue shares and dilute the shareholders because they're currently burning cash at a pretty hefty rate. Not super crazy, but they're losing cash. So my question is, how many months can they go without having to resort to raising debt or issuing shares? Because right now, let's see, they're how much debt do they have? So it's mostly leases. Okay, with the lease, you have to accrue a liability and an asset on your balance sheet. But honestly, their debt doesn't look too freaking crazy. So that's one good thing for the company. But if you think about it, if they're burning cash and their share price is heavily depressed, they're either going to have to dilute you like crazy to get enough money to fund their operations, or they're going to have to go into debt. Or worst case, they're going to have to sell assets, which that's like a death knell. It's a bad sign for a company. Okay. So let's go down. Let's see. Yeah, the shares are going to be hard to read because this is year over year and it wasn't public last time. Now, actually, here we go. December 31st, 2021 to March 31st. Let's see how many shares they issued in 3 months. Okay. Oh, okay. Yeah, they barely issued any shares. Very small. They went from 91.51 million to 91.57. So at least they're not diluting that freaking crazy. But if you look at this accumulated deficit line right here. This is a $405 million. This company has had a cumulative loss of $405 million. Have they turned a profit at all? I don't think so. $405 million of losses stacked up over and over and over again for a company that has no moat. Wow. All right. Cash flows from operating activities. So they burned $14.7 million of cash in 3 months. So they're burning roughly 14.7 divided by 3. They're burning roughly $5 million a month. So if we go back and look, okay, they're actually going to be fine because if you look at their very liquid assets, let's see, let's add them up. 444.7 plus 33.3 plus 29.9 divided by 5. So if they continue to burn cash at the rate that they're going, and I only counted cash and cash equivalents, short-term investments, and accounts receivable, they have roughly 21, 22 months before they lose all their money, assuming the same burn rate. So there may not be a huge risk of dilution with this company yet, but that's not the problem. The problem is they're losing money hand over freaking fist. $14 million burned. So they pulled in revenue of $68 million and burned $14 million. Wow. Very, very impressive. Let's see. Not really much going on in the investing side. They just had some short-term investments mature. Okay. And they purchased a little bit of property, plant, and equipment for $240,000. Yeah. So they're not really expanding massively. I mean, they're just, I don't know, burning cash. And let's see if they're issuing shares. Taxes paid. They paid some taxes. Proceeds from exercise of stock options. Okay, there was a little bit of dilution. Payments on finance leases. So overall, this company is sitting in a good cash position. So I would not worry too much about them going out of business anytime soon. And honestly, they they have a good chance of not diluting you significantly for at least 20-something months, assuming the burn rate. But like I said, that's not my concern. My concern is the gross margin, which has been declining. Can they reverse that? They need to freaking reverse that, especially in an industry like they're in, highly competitive. These massive losses, holy freaking crap. $14 million, what, negative 20% loss? What are you doing? Negative revenue growth? With a company like this, is it going to survive? Maybe, possibly, sure. Maybe they're going to fix something. But at the end of the day, why would you buy this right now? Why take the risk of buying a company that's losing money hand over fist and has about 20 months left to live? What? Think about it. If you had a business down the road and they said, hey, you want to invest in my business? And they pulled up their financial statements and they were losing cash every single month. And they were having massive losses. And there was 20 other businesses just like that business. What distinguishes that business? Jessica Alba? Really? Okay. What a disaster. So I'm not touching the stock with a 10-foot pole. Now, I know the stock price went up today. That means absolutely freaking nothing to me. I don't care if this stock 5X's in the next year. I would not touch this freaking stock because it's if you buy a stock that's going up with no fundamentals, you're just gambling like a freaking clown. You don't want to do that. Okay, that's what Lafufu does. If you want to be an actual investor, at least have a company with positive cash flows. See, I was actually excited about Honest a little bit. I was up all night worrying about Honest. Because if you look at the last couple of quarters, you could see they had, for the quarter ended June 30th, 2021, they burned $20 million of cash. Then it dropped to $3.75 million. Then it dropped to $1.8 million of cash burn. So I was like, maybe they might actually have positive operating cash flow this quarter. And of course, complete and utter decimation. So that's my thoughts. You can watch this company. I want to see their gross margin start to expand. I want to see their revenue actually growing. I want to monitor their cash burn. There's just a lot going on here that is not encouraging to me, but they're not going out of business anytime soon. They're not. I mean, and if they slow down this cash burn, they'll be fine for a long, long time. So that's my thoughts on Honest, my bonest. Is this enough to buy Honest diapers? They're the future. Yeah. Honest, like this. Why Honest? I don't understand. I don't get it. I mean, like, cool. Maybe it 5X's one day. I don't know. Honest, my bonest. Chinese diaper will make your butt fall off. My kid seems fine. He's probably wearing China-made diapers. He's okay. Mike Stathis is still alive. God, what is he? He's such a freaking loser. Such a coward. He's like, oh, I'm going to call out these con artists. And then he calls me a con artist. I'm like, okay, let's debate, loser. Nothing. I use Honest Wipes to wipe my mom's butt. Bullish. The CEO has been selling stock. I mean, I would. It's probably just going to go lower. I took my Coinbase profit and bought one Tesla share. Okay, so you made $700 on your trade. Genius. 10x, bro. Coinbase. You can't value Coinbase, people. It's a crypto stock. It's like valuing a crypto. All right, that's it. I actually have other side jobs I have to do. I have to tutor a young student in 7 minutes. See, I make money on YouTube. I make money doing other things. I'm a freaking hero, okay? That's it. Talk to you